Danish, CEO, co-founder of Zensurance. Before I came here, I checked out some videos on YouTube of prior speakers. And so many of the speakers would be walking back and forth. And that gave me a headache while I was watching the video. So I said, I'm just going to stand in one place. Maybe I'll do a little walk, but for the most part, I'll stay here for the sanity of anyone that's watching it on YouTube. As Jared mentioned, I'm an engineer. I was a consultant. I did my MBA. And somehow I became an insurance broker. And I'm trying to figure out, as you said, how do I make it cool? And I'll talk a little bit about the insurance industry, what's happening, and where I see it going. And there's a lot of analogies to other industries within fintech and outside fintech as well. I've been working in the industry in different forms for about 10 years, and I've seen the nitty-gritty of policy issuance, underwriting, claims, as well as in the boardrooms of the big companies. And it's that experience that had led me to say, I really like this industry. I want to do something in the space. It is truly a very important industry, and it goes back to shippers in London in the 1600s that wanted to share the risk of one of their ships going down, and they would sit at a coffee shop and exchange the risk. And that's where Lloyd's started, one of the world's largest insurance companies. So big history, does an important job for the industry, so that's why I like the space. Just to calibrate on what I'm talking about, it's the property and casualty insurance industry. Life and health and benefits is the other half. Roughly the same size, $500 billion in premium in North America, almost 4 million people employed directly and indirectly, and a lot of interest on the venture capital side. It is relatively late to the game in fintech. You had payments, you had lending, you had investing, and insurtech is just picking up. And there's a lot of reasons why it's picking up, and a lot of reasons why there's interest in the space. And I'll be getting into both of those. It's a horrible, horrible customer experience. If you look at the Net Promoter Score, it's just destroyed by every single customer out there. Based on this research, I think property and casualty insurance is just above cable companies. It's that bad. And there's very little that the big companies are able to do because a lot of things that I'm going to talk about. It also creates an opportunity. The insiders and the outsiders refer to property and casualty as male, pale, and stale because of how old school it is. If you want to buy a policy, you probably have to get on the phone, you have to go in person, you have to pay by check, you may have to fax things. And so there's a lot of things that have to happen. And part of the reason it is that bad is because of how complex the value chain is. This is a simplified version of a value chain. If you buy a policy, there might be 5 companies in the middle taking a cut of that transaction, and 5 sets of people that are looking at paper and sending it in. When we were signing up as a brokerage with one of the insurance companies, we got a package in the mail that said, all right, welcome to so-and-so insurance company. Please fill out this form and we'll assign you as a broker. One of the questions on that form was, which version of Windows are you using? 95, NT, 2000, other. How do you like to get paid? Wire or check? So things like that, and just shows you how old school it is. And very little has changed in a long time. But that also creates the opportunity. It's a huge industry. It's complicated. It's very manual. 4 million people doing this kind of work. And that's the only reason companies like Zensurance exist, is because of this. A lot of insurance is mandatory, and which is great for companies in the space because it's a customer that's captive. They have to buy it. Of course, there's regulations. There's legacy technology, but also legacy mindsets. And it's the mindsets that I think is holding it more back than the technology. I tried to create a list of all of the alphabets and the buzzwords that are going around in InsurTech with each of the letters. I didn't have time, but literally everything you can say, crypto, blockchain, this, that, everyone is trying something or another in the space. So what I tried to do is distill that into 3 strikes, as I would call it, that's driving big change in the industry. And it's really questioning the fundamentals of what the insurance industry is out there to achieve. What's the role of the intermediaries? There's so many of them. What's the role of human judgment? And what are we really buying? So I'm going to quickly run through each of these. So if you imagine a scenario when you buy, or when you get some real estate space, what happens? Your real estate broker says you need insurance before you can move in. You go to an insurance broker, you say, hey, I need insurance. The broker says, I need to know what your roof is made of, what your wiring is made of, what your plumbing is made of. You go to your real estate broker and you say, can you give me the answers to these questions? Who then goes to the owner of the building, gives it to you, you give it to the broker, they give you a policy, you turn it around. That happens tens of thousands of times every week across Canada. So when you talk about automation, all of this manual work, a lot of startups are trying to automate that value chain by just doing that instantly. It happened with travel agents, it happened with investing, it's happening with lending, and is just picking up here. I think as that picks up steam, that's the first strike. And if you think about, of the 4 million people, hundreds of thousands are doing exactly what I just described all the time. Second strike, data and AI. Think about a hailstorm hitting, say, the beaches area. What happens after a hailstorm? Well, there's going to be hundreds of people from the insurance companies, the adjusters, going and figuring out what happened to the rooftop, what happened to the wall, what happened to the cars. Now you can have a satellite imagery, you can have drones and tell you exactly what happened. What's more is they can even tell what was there prior to the hailstorm. And so if it's a pre-existing condition, the insurance company may not pay for it. So there's a double-edged sword there that the data and the analytics allows that to happen. I've seen disability claims get declined because somebody claimed a disability check, but then on Facebook had pictures of them golfing. And this company is really good at these things. They caught it, they declined the claim. Traditionally, insurance is priced once a year. You fill out an application and you get your price for the year. That's it. But that's also changing with access to constant data from accounting and payroll platforms and other things. You can know exactly what each customer is doing every day. Imagine a scenario, and I'm switching a little bit of a different industry. Every time you go down the ski slope, you pay for disability insurance. It's a different rate. First time in the morning, it's 10 cents. You're fresh. The second, third time you're going, it's 25 cents. Your heart rate is up. You're a little sweaty. By the end of the day, you're paying $10 every time you're going down because the risk of you getting disabled is so much higher. Now imagine that in every single thing that you're doing. It exists for car insurance today, where you can plug in a device and based on how you drive, your price is different. But imagine the amount of data that's available there that you can do this quickly with. Which leads me to the third thing. The automation, the AI, is begging the question, what are you really buying? We've helped a couple thousand businesses over the last year. Very, very few came to us and said, hey Danish, I really want insurance, help me get insurance. Most of the time it was some investor saying you must have it, some landlord saying something that you need insurance. So really you're getting an asset, a car, a home, an office, and you just want to protect the asset. And I think of it like this, when Future Shop existed and I would buy printers, the bubble jet printers, I would always get the extended warranty because I know the way I use that printer, it was going to die 3 times before I got the next one. And that extended warranty constantly replaced the printer for me. But imagine when you buy an office space, it's just bundled in. The example I give is Tesla. It's actually moving more from the driver being insured to the car being insured. And it's Tesla doing direct deals with insurance companies to say, we know exactly how this car is going to drive. When a customer buys it, they pay a monthly lease. Insurance is bundled into it. So I think the way it's going for almost all assets, you're not buying insurance separately. You're buying the asset and it comes bundled with the warranty because the data is accessible, because everything is automated, and you really don't want insurance. So when you look at 1, 2, and 3, in some ways, I think insurance is disappearing. But in other ways, it's going to be much larger. So I think in 20 years, insurance will be far, far bigger than it is today because of the number and the types of assets, the risks that are out there. But it'll be invisible. It'll be bundled into everything that you get. Everything's automatically being taken care of. You're in an accident in a car. The car knows what is damaged, what's not. It does the assessment. It tweets out to a tow truck. The tow truck comes. It prints the fender that is now damaged and attaches it, and you're off. So I think all of that means there's a lot more risks, but you're not buying insurance. You're buying your asset, and your asset is protected automatically.
Thank you. So there's a couple of mics around. The volunteers will send them out. If you just put up your hands, we have time for a few questions.
So, in your opinion, where are the largest gaps in the market, and how do you take advantage of it?
What was the last thing you said?
How do you take advantage of those gaps?
The gap. So if I just look at property and casualty insurance, there are some places that you can get an instant price, but everything is really, really manual. So I think the first thing that has to be solved is how do you eliminate all of the paper and the manual work? Only then can we get to the next thing. So I would say that the biggest gap is just figuring out how do you apply algorithms to what people are doing on paper and spreadsheets.
Hi, thank you. Could you talk a little bit about competitors and similar players in the space, such as Lemonade in New York and other players using artificial intelligence?
Yeah.
Chatbots.
So if you divide the world into life and health and property and casualty, you can divide property and casualty into personal insurance and commercial insurance. Personal insurance being your home and your car. Most of the companies 18 months and older are focused on personal insurance. So for example, Lemonade, tenants insurance, small $15, $20 package. Very few are looking at the commercial insurance side, which is more complicated, it's more broken, but that's why we're there, because we see the opportunity. So I think there's a lot of activity on the first, the automation, a little bit less on data and automation, and then even a little bit less on new insurance products. But across the board, there's different companies where you can turn insurance on and off as you ride the bike. Only when you're gone for that 30 minutes, it's insured. When you come back, you turn it off. So there's different people at different stages.
Thank you very much. Excellent presentation. I have just a quick question about, do you think the distribution channels are going to change anytime soon, or they're going to stay the same, like MGAs, wholesalers?
I think a lot of it disappears, just because it's going to take some time. But why do you need to talk to a human when a machine will just price your car automatically? And it just comes bundled into it. Tesla does that. When was the last time any of us went to a travel agent? Although Expedia is a travel agent, you don't go to the human. It's just done. So I think a lot of that disappears. It's going to take some time, but it's already happening in certain segments.
Any last question?
So with your analogy about the ski trip and stuff like that, how far into people's personal lives do you actually see these AI analysis going? And do you think that there's actually any kind of future concern as far as like personal privacy goes?
There's definitely a concern, but I would say that about, I don't use Instagram, but I would say that about Instagram. I don't know how the next generation is putting up pictures that they put up there. They don't care. And there's a lot of people that are willing to put a lot of personal information out there. Now, it would be opt-in, but the more people that opt in, that prove that they're a good risk, their price goes down, and everybody else's prices could go up. Because all the people that are good risk are selecting to share the information. So it'll be an opt-in, definitely a privacy issue, but there's so much out there that you don't control.
And do you see that becoming something that could actually become prohibitively expensive not to opt into? Like, do you see that becoming weighted so heavily towards that?
I think regulations will help prevent it being too egregious. So there are some rules around what you can and can't charge, and we'll have to rely on regulation protecting the consumer. But like in auto insurance, I'm a customer of Impact Insurance. I opted into their usage-based insurance because I got I think it was 15% discount. I'm okay with that. And my following year, I can get a 10% discount. I'm okay with that.
Thank you very much.